any other YouTuber like that obnoxious kid with the spiky hair, passive income investor or whatever.
Hey, at least I still got most of my hair. Jokes aside, I got a little bit of a widow's peak here though, man. I mean, it is pulling back. Hopefully I keep it through most of my 30s. It'd be nice to have some hair in my 40s. But today, folks, whether it's a real estate, covered call, ETFs, what I'm doing in full transparency within these tax advantage accounts, we got to answer your comments, your questions, because they've been exhilarating this week as we hit all-time highs. This full-blown bull market that I only hope is benefiting you as much as it's benefiting me as I hit this milestone of over $500,000 within the combined tax advantaged accounts, breaking them down for you from some of your questions this week to show you the Corp, the TFSA, the RRSP with some recent contributions and some adjustments to Google. We got to talk about it. So if you're on a path to financial independence, if one day you want to retire early, join me on that journey. Hit that subscribe button, folks, because first question, do you buy VOO in your RRSP and USD to avoid the withholding tax and put VDY in your TFSA? I will say I don't focus on withholding all that much, but if I was still holding, say, SCHD, a US dividend ETF that I held for a while, I did hold it in my RRSP, and I would be more conscious of that, because if you're a long-term oriented investor with a long horizon, you want to, inch out those little bit of extra returns, and not having to pay 15% withholding, that over the border tax on US dividends, makes a big difference on the long scale. But right now I'm mainly holding my ETFs like VOO, which yes, it does, I do have to pay withholding tax in my TFSA and my corp account, but I look at it as more of a growth-oriented ETF, and I don't mind paying that little bit of withholding. But yeah, in my RSP, I'm not paying any of it, and it does help, and it is nice having VDY in my TFSA. As somebody that looks at total returns, I believe income, and growth, you combine these together to get best of all markets. So if the market does go down, you got some income to reinvest. If markets are flying, hey, you're benefiting from that major upside. And yeah, I've got about $8,000 now in dividend income. I'd like to get my total dividends up to around 2% of the portfolio, but that will take some time and will require newly allocated capital. But diving into the next question here, folks. So what you just told the world is you actively trade in your TFSA rather than passively? CRA is listening and taking notes. Not sure your disclaimer of this video is for entertainment only will hold up considering your active business-like income in your TFSA. Just saying. And this guy pointed out there is no definition to active trading. And let's take a look at the CRA and we'll get a clear understanding if I do not meet the given guidelines. But basically they look at frequency of transactions with a history of extensive buying and selling of securities, especially day trading. I'm a very boring investor. I do not actively trade. Most of my trades are several months apart, mostly into the years apart. As again, guys, I am a long-term oriented investor that's looking for the best total returns and building out wealth preservation. But I do mess around a little bit with some individual stocks, but those aren't day trades or, they're long-term typical holds. And I'm still going long Google, even though I took some profit, just to make it a healthier weighting, right? It's rebalancing. But period of ownership, the CRA looks at how long you hold your investment. If you consistently hold securities for only a short period, days or weeks, it's most likely to be seen as business long-term investment strategies. Where you hold asset for years are generally safe. So yeah, most of my holdings for years, guys. There's nothing that I hold typically, within the period of at least 6 months. I mean, even Take Two I held for quite a considerable amount of time before balancing it out. But knowledge and experience. If you have extensive knowledge of security markets or are a professional investor or spend significant amounts of time studying the market, this could be investigating potential purchases. The CRA may view your activity as business. So yeah, I could see this maybe bleeding over a little bit. I am just a finfluencer clown that is unlicensed here on the internet for entertainment purposes only, to try and inspire you and build up your confidence to invest and start building out your own retirement plans, and hopefully to the youth as well. But I could see this being maybe a minor concern if I was like way more leveraged in stocks. Like I kind of removed all my individual investments, and even those were long-term back in the day, just to kind of allocate them into these ETFs that still hold the same investments, just takes the management out of my hands. Guys, I told you, if it wasn't for YouTube and me making this as an entertainment career, I would never look at the markets. And you can see that within my accounts, guys. Like, these aren't things that I'm looking at every day trying to be like, yeah, business income buying the S&P 500 here, guys. I will say you can see that I tend to hold most of my individual stocks and my small cap stocks. I don't talk about as much on this channel within my corporate account because, the corporate account is more business oriented income. And the problem is I hold a lot of ETFs, and even Google and Meta will eventually be long-term holds in there. I'm not trading them. So I'm probably going to get slapped with that passive income tax, which isn't too severe, but that is another risk. The tax tax liability across all these accounts are severely different. But regardless, the nature of the security, the CRA may consider the type of investments you're trading investments that are speculative or non-dividend paying, such as penny stocks or short-dated options. So I don't hold options. I don't do options trading in my TFSA. Something to be concerned about if you are. And I don't hold currently any penny stocks within my TFSA either, just to balance out that risk. Because again, I don't think the CRA is ever going to look at my account and be like, yeah, this guy is an active day trading business account, guy. For sure. But the intention, the CRA will be determining your intention. Was your primary goal to hold the investment for the long term, or was it to acquire and resell security for a quick profit? Again, guys, nothing in here is that quick, and I think you guys get bored by that. But regardless, this should hopefully help give you the guidelines for yourself if you are more actively involved in your TFSA, just to be well aware of the risks. And what will end up happening is any gains achieved will just be looked at as taxable income, probably the long term, or I don't know if the active capital gains rate isn't a personal account, but it's still pretty minor taxes overall. So even you'd have to make a lot of money, I think, for them to care. And if you do actively trade, the likelihood of you making money is like null over the long period. So, I mean, they probably don't even care because you're probably losing money overall. But I always advocate for the long here, guys. So do keep that in mind. But yeah, I don't think I'm an active trader by any metric. Regardless, you're crazy if you think real estate is bottoming. This is just the beginning. Now, I look at real estate through a speculative lens when I'm talking about the future, just like I do the market. I don't know what tomorrow brings, which is why I only cost average and I don't time anything, because no one can time the future. And I'm calling the bottom of the real estate market speculating because we're seeing signs of volume picking up. If you look at outside of any major hot real estate area, the prices have actually increased year over year, right? Alberta, Saskatchewan, Manitoba, Quebec. You look at all these places and year over year, real estate's up. Quebec, it's up 7.6%. But yeah, Ontario's down 1.8% year over year. Vancouver's 1.8% year over year. Regardless, these are the hottest cities in the world. They're major metropolitan areas, and we still have supply slumps. And with interest rates coming down, guys, continually here, I wouldn't be surprised if we start seeing a leveling off in prices. Now, could I be wrong? Could an economic shift, recession change all of that outlook? 100%. That's why I'm not trying to predict the future. You should just look and say, hey, if I'm in a place where I'm going to be living for 10 plus years longer and it's within my budget, and it allocates correctly, I would recommend buying a house, and this is a buyer's market. But go on WOWA.ca, WOA, and you can actually take a look at different areas if you live in Ontario, where I live in Toronto, and you can find pockets that are a bit cheaper. You can look at different areas and maybe find what fits your allocated budget, because I'm telling you, this is the same when the stock market tanks, when people start making comments like this and showing major signs of concern, and it's a buyer's market, there's volume of sales is slowing down. This is typically that period where it's like, hey, we're in probably a bear correctional period for real estate. So if you're in the market, it's probably the best opportune time to buy coming out of a 10-15 year bull real estate market. So don't get scared when everyone else is telling you it's going to get worse. It's going to get worse. It's usually the time to buy, and is proven to be the case throughout history, and especially with the recent market conditions just as early as the tariff war in April, right? So the profit is a profit. Well done, Kyle. I don't envy you sharing your portfolio with total transparency. I don't feel as confident in my picks to put it all out there, but you seem to have a horseshoe somewhere. So I will say what I've learned is that I speak with confidence, but have underlying uncertainties, right? I went into this the same way most new people do. It's very sketchy to move large amounts of capital around. It can be quite worrisome, but my goal is to just get you confident enough to start doing it. Because so long as you're playing in the arena over long periods of time, if you've not been a part of that investing class, you've been left behind. And I don't want this generation to be left behind. So I'm just trying to get people involved. Now, obviously, black swans, I don't know whatever happens. I picked horrible stocks in the past, like Momentous. There's Geo Group I picked at the worst time way years ago, guys. I was even on Netflix for buying that stock, and they made me look like a horrific, evil, morally incompetent person or something. But regardless, the goal in this transparency and the goal of this channel is to do what I didn't have back in the day, which was YouTube influencers. Like, I was left to BNN guys. StockTwits was around back in the day, but all this stuff you see today didn't exist. I didn't even know what a TFSA was in the first few years I was investing. So it's incredible the tools that people have, and I hope this channel inspires that, because that is the goal. But that doesn't mean I'm right. A black swan could have hit anywhere in between, and we could have lost a lot more money on these individual stocks. Individual securities are speculating. They're heavily risky. That's why I don't recommend making more than 10, maybe 20% at most of your portfolio speculations or high degree of speculations. And obviously everything is speculating to a degree, but the indexes, right, over 20-year periods have never lost money, and they're market cap weighted, so you're not emotionally managing and timing buys and sells. So this is why I've allocated my portfolio in the way that I have. But again, I do appreciate you keeping your stuff private. You don't have to put it out there. No one actually has to put it out there. Glad your Google is working out for you on your Google YouTube channel. I do miss you ragging on Tesla, though. It's usually 50-50 with covered calls. Yeah, guys, I don't know. I haven't battered Tesla. I know that Elon just bought some shares, pumped the whole community up again on the back of a company that has no real growth in front of it at the moment. I could crap on it all day. Tesla's a company that I love, and it is why I crap on it so aggressively, and I crap on covered calls, because if you're a young investor, I just want to see you do your best, and covered calls will deteriorate your long-term performance. So I just want you to, always take all of us into consideration and balance it out into a healthy, diversified portfolio. So I do it in a very hyperbolic way for entertainment purposes. Obviously, I don't really care what anybody does at the end of the day. That's just why I just show what I do, and hopefully you can learn from it, right? But your ratio is off, Law. Keep rocking it, Kyle. Pleasure as always, Jason. You're an OG, a legend to this community. You've been exclusively an index investor, or I have been exclusively an index investor my whole life, but when Google hit a 15 times PE, I bought 100K. I couldn't resist. I'm up 40% in 4 months. Wild, but I'm going to hold for all the reasons you mentioned. Hard not to be bullish with all the applications they are building on top of Gemini and cloud and YouTube. Yeah, I still think Google's trading at fair value here. Again, I was just reallocating and balancing my portfolio out because I said, hey, I was happy with the Google I held, but some of it was just for the idea that I thought it was undervalued, and I could have ended up holding it for a year to see that value start to accumulate. But now we've seen the value come into play. We were right on a lot of aspects of it, and I just wanted to scale it down, get kind of rid of some of the overall speculative risk, because again, I just don't want to be that allocated to one stock that has that much control over the entire portfolio. Because you do have to keep in mind, my fiance is still holding her shares. She keeps them within her TFSA. So I just said, hey, we got a lot of this now. Let's scale her down a little bit like we've done throughout the history of this channel, reallocate it to wealth preservation, and go long the rest, because I am long Google just as much as you guys are. I know some of you are disappointed to see me sell a bit of it, but hey, to each their own. I just think this is a healthy approach to, again, building out a diversified portfolio. As somebody that is 33 years old, who's more growth oriented, to each their own. This is how I've done it, and I'd love to know how you're doing it in that comment section below. And if you want to join me, chat with me one-on-one, go to kylelivingston.com. You can support the channel, link in the description. But on that, as always, I look forward to catching you in the next one.